Okay, guys, so in this video, we're going to talk about Draftkings stock, ticker symbol DKNG. And I'm going to explain to you guys a couple of reasons why the stock is going down. So I read some of your comments. You guys are wondering what's going on with Draftkings stock. And I did make a video a couple of weeks ago explaining why I was buying DraftKings stock. And if you guys aren't familiar, I am a long-time daily fantasy sports player. I've been playing on sites like FanDuel and DraftKings for many years, so I really understand the industry. So that's why I jumped at the chance to buy a stake in DraftKings for a long-term hold. But maybe some of you guys bought up here at around $40 or so, and now you're wondering what's going on. So I'm going to explain everything in this video, why the stock is going down. It's really not anything wrong with the business model itself. It's just merely due to kind of the new offerings and the fact that the stock has run up so much. So before I get into this video, guys, please smash the like button. It really helps the algorithm. Okay, so let's get into it, guys. So as we can see here, DraftKings, basically to keep a short story, keep this explain you guys what's been going on with this stock. This stock basically just recently merged with an SPAC. That's a special purpose acquisition company. So DraftKings wanted to go public and they merged with this other company and they officially changed the ticker symbol to DKNG. So what really happened was is that the stock kind of just merely took off. So it was basically around. Okay, so the merger took place on April 24th. So on April 24th, the stock was currently trading at around $20. And I've been buying basically on the way up. So I bought a little bit around 23. I bought some at 27. And as the stock kept going up, I just continued to add to my position. So I don't have a ton of money in this stock. I don't hold that many shares. I believe I hold something like 17 to 20 shares because I want to build a position in this company slowly. And then what happened was is that the price started to tank. So let's go over exactly what's been going on. So the first thing that happened is that DraftKings basically started selling and issuing more shares. So as we can see here, okay, so here we have an article on Yahoo Finance. It says DraftKings announces upsides in pricing of public offering. So what ended up happening is that they ended up offering around 40 million shares of stock, and then DraftKings additionally sold some, and then a lot of the people that had the stock before the SPAC merger, they ended up selling too, and the offering price was around $40. So they generated around 1.6 billion in total, and out of that money, DraftKings got a portion of it, and then those original shareholders received a bunch of money too. So the reason why DraftKings sold 16 million shares, they wanted to just raise money, kind of reduce cash burn, and just have a stable cash position during this pandemic situation because sports are currently closed. And guys, it appears like cases are rising. So even though the leagues like the MLB, the NFL, the NBA, a lot of these leagues are set to reopen, but we really don't know what's going to happen now because cases are continuing to rise. And we'll see what happens. Like for instance, the NBA is not supposed to open until the end of July. Obviously, the NFL will be sometime in September. Major League Baseball will be in the future too. So we really don't know what's going to happen. But the good thing is that DraftKings was doing pretty good with their esports and things like that, and they were actually growing revenue during the pandemic because everybody was at home. And then the other 24 million shares, those are simply people that just simply had the stock before the merger. So that was people that basically had the stock when it was around $10 or so. They basically bought it in very early. So maybe they acquired the stock at $10, something like that. And then the stock basically quadrupled. So they were just simply taking profits. So I'm going to give you guys some other reasons what's been going on. So as I mentioned that a lot of 24 million shares were sold. A lot of those were key insiders as well, which is a very, very bearish signal. So I'll take you guys to another website. This is Guru Focus, really excellent site. You can track insider trading. So insider trading is basically executives, C-level executives. So I'm not talking about people like a regular employee or something like that, or a computer programmer or a marketing executive. I'm talking about the CFO, people on the board of directors, the CEO. So what happened is on June 23rd, a lot of these key insiders sold a ton of shares. So as you can see here, let's just start with the CEO, Jason Robbins. He sold 1.8 million shares at $38, and they all sold. There was just a massive dumping of the stocks. As you can see here, Jason Robbins, the CFO, another director. They just sold off a ton of shares, and that was part of those 4 million shares that got sold off. So that's really not a good sign when key insiders are dumping the stock. Usually you would want them to be buying it because obviously if they're selling the stock, they probably think that it's a little bit overvalued. But the good thing is that a lot of these insiders still have a big stake in the company. They didn't sell all their shares; they just sold some of them. So that's another reason why the stock went down. That's a very, very bearish signal. When insiders are selling, usually stocks tend to go down, and when insiders are buying, usually stocks tend to go up. And then another reason why the stock went down is that it passed over a key technical indicator. So, there's lots of different technical indicators out there that I like to keep it simple. I like to just use moving averages. Moving average is basically the price over a time period divided by the number of days. And what I like to do is I like to use the 20-day moving average. So simply there's 5 business days in a week. A 20-day moving average is like 4 weeks, which is basically, 28 days, which is basically, the amount of time in 1 month. So if we take a look here at the moving average, I'm using a tool called TradingView. You can get it at tradingview.com. It's free, 100% free and to use. So I just changed this to 20. So I do the 20-day moving average. So we can see here, we just get to the year-to-date chart. We can see that the stock has crossed below the 20-day moving average. So that's another bearish signal. So as you can see here, when the last time the stock crossed below the 20-day moving average, it went all the way down to 11, and then when it crossed above, that was when it went on its tear. So when a stock crosses below its 20-day moving average, usually the stock will dip much lower. So right now, it's basically what your goal is. For me personally, I'm not selling a single share of DraftKings. I understood what the insiders sold. A lot of them went from $10 to $40 in a span of months. They quadrupled their money. They're taking some profits off the table. It perfectly makes sense, but for me, I just like DraftKings stock. I think it is. I think obviously it ran up so fast. Anytime something is up 4x in like a couple of months, people are going to sell. But I really think that even if sports don't really open back up fully, I think that the opportunity for online gambling is massive. Online gambling is just taking over the world by storm. It's exploding. And we all know that, DraftKings was already making a ton of money with their daily fantasy sports. And when, they're the biggest online sports book in the United States. The other big one is FanDuel, but FanDuel is owned by a company based in Europe, and DraftKings is much bigger. And I think DraftKings is just a great long-term hold. So I'm not really sure what's going to happen with sports with the pandemic and the cases rising. So if you guys bought at the top, sometimes if you're not really in this stock long term, it's probably best to just sell and cut your losses. There's some other stocks that I've been talking about that are looking a lot like they're going to move up a lot more. I mentioned Helion, that's ticker symbol SHLL. There's other stocks like Workhorse, ticker symbol WKHS. Those stocks are kind of, in the whole electric vehicle industry. So if you're looking to like kind of buy a stock that's going to move up pretty quickly, I think those EV car stocks, those EV trucking stocks are red hot. But it could go lower. So, me, I'm just continuing to buy, continue to add to my position. I'm a long-term holder. I'm looking at DraftKings in the long run. Sports betting and gambling and things like that are still pretty illegal in the United States. I believe it's only legal in like 5 to 7 states. So a long way to go for this industry. But that's just my take on why the stock is going down. I think it's just simply the massive offering, adding 40 million shares, which is kind of diluted uh, the stock, the massive insider selling, and of course the fact that the stock crossed below the 20-day moving average. So yeah, anytime you're adding that millions and millions of shares to the shares outstanding, that's going to usually send the stock down. And of course, the insider selling is not a great sign. Very, very bearish signal short term, and people are a little skittish now on things like that. So that's just my take, guys. Like I said, I didn't expect that to happen per se, but I guess, the whole second wave theory was pretty accurate. And at first I thought it was pretty crazy, but according to the rises in cases, it looks like we might not have sports back as soon as possible. So that was kind of one of the reasons why I was so excited to see sports open back up. But if sports aren't opening back up, this is going to limit DraftKings revenue. So for me, I'm still holding on to the stock. We'll see how much lower it goes. I'll be sure to make an update video. But those are kind of my reasons why I think the stock is going down. So I hope you enjoyed this video, guys. Like I said, to kind of just recap everything, if you're long term, I think you can hold here. If you were looking to profit on a short term movement, might be a good chance to just sell, cut your losses, and move on to a different stock. So that's it for now, guys. I hope you enjoyed this video. Please smash that red subscribe button, subscribe to get more videos on DraftKings stock and other high growth stocks that I think can make you a lot of money. So that's it. Until next time, guys. Take care.